Welcome back to another edition of Account Insights by B2Brain. Today we're going to talk about Dick's Sporting Goods. They announced their quarterly earnings on 23rd of August. Dick's Sporting Goods is a $12 billion in sales, sports and athletic equipment company. Since 2018, they have been on a massive transformation journey, and it looks like the company is seeing results of their investments, continued investments in digital and technology and e-commerce and multi-channel and loyalty programs to improve customer lifetime value and engagement over time to be bearing fruit as the company enters into a growth category, which is athletic footwear, and today has got an 8% market share. We've analyzed the quarterly earnings transcripts and learned about insights around e-commerce, loyalty programs, supply chain, and their outlook towards finance and operations, specifically around improving margins vis-a-vis continuing to invest and gain market share. So let's dive right in. Go to the highlight of the analyst call, which is where the company is talking about continuing their digital transformation journey in order to drive long-term profitable growth. They are one of those few retailers that believes in investing in in-store experience for the athletes. They have figured out ways and means by which they can build an assortment of products that athletes really want to come and consume and engage and purchase from the store. In addition, the company has been adopting and investing in technology behind multi-channel engagement with users across mobile, across the web and the store. So there seems to be an integration of how they are leveraging the investments as well as leveraging data science to make sure the experience of users at any touch point is always cohesive and adding to each other. In addition, the company has been finding fantastic growth with their scorecard loyalty members, which has continued to generate a significant share of sales for the business. That is the highlight for if you are running an e-commerce or a solution around e-commerce, loyalty, personalization. This could be very valuable for you to keep in mind about Dick's Sporting Goods. That's the first part. More recently, Dick's Sporting Goods did face supply chain constraints due to the macroeconomic conditions, but the company is also very smartly played on the assortments and the product categories that they want to carry in order to maximize customer engagement and maximize customer value. So they think that the assortment they have for the upcoming back-to-school season is ready for the market, and that they believe they can navigate the rest of the year's supply chain environment smoothly. How they are thinking about margin pressures and how they are thinking about improving profitability. If you notice, the company is playing in a category where they think at 8% market share today in a very strong industry, there is a lot of room for growth. So if they had to choose between improving margins versus investing behind growth, it seems to be that the company is more interested in investing for growth. I can continue to think of products in and around the user experience spectrum. They are talking about investing in data science as a specific area of skill and competence for the company. That's another area which seems like of a lot of interest for the business. So there you go. You have e-commerce, loyalty, personalization. Then you have supply chain related product assortment and inventory holding capabilities. Then you have areas around data science and other growth related areas. Yeah, so that's all for today's session with Dick's Sporting Goods. We will come back for more. If you liked what you saw here, remember you can get these kind of insights and more for companies that you're going after, specific to the value proposition your business is offering, right within B2Brain. If you'd like to try that, go for a 14-day 10 account free trial with b2brain.com and be our guest. Thank you.